All right, everybody. I think we've given everybody a chance to sign in. My name is Ed Grass. I'm going to be sitting in today for Sandra Delancey. I'll be the moderator for today's webinar. We have muted your audio, but we will allow plenty of opportunities to ask questions. If you have questions, please send them to me using the question feature of Go to Webinar. You actually can send them to Sandra Delancey or to Ed Grass. I think either will work, but probably Sandra's the best since hers is set up as the organizer. Pardon me. I'm excited to be here to present two of the DMV's real estate leaders, Sam Jackman and Charlie Einsman. They're also business partners together at Clear Sky Financial LLC. Today, they're going to be presenting the next webinar in our real estate investing series. Today, Sam and Charlie will give you an update on the current state of the real estate market in the DMV, that's DC, Maryland, and Virginia, and we're calling this our post-election edition. Next, we jump into our hot topic of the month, which is a special presentation by our guest, Lisa Hancock from Market Pro Homes. Lisa is the Director of Dispositions for Market Pro Homes. She joined them back in 2012 and has had many positions during her tenure there. In her current role, Lisa is integral to working with other investors in helping them secure properties that meet their buying needs. Additionally, she uses her extensive background in home renovations to oversee and help oversee construction projects. Before joining Market Pro Home Buyers, she co-owned a high-end painting company and worked as a business manager for a mortgage lender. Lisa maintains a busy life between working at Market Pro Home Buyers and raising her 4 girls, which I'm sure is probably the most difficult of all those many jobs. We'll, of course, have our regular panelists as well. Charlie Einsman has more than 20 years of real estate experience, particularly skilled in structure and negotiating win-win solutions for distressed sales. Along with Sam, Charlie co-founded Clear Sky Properties LLC in 2005, Clear Sky Financial LLC in 2013. Sam has more than 25 years of experience in similar real estate endeavors, particularly distressed property sales and developments. He primarily takes the lead for loan closing and administrative duties for Clear Sky Financial, while he and Charlie collaborate on and investigate prospective deals. So let me hand it over to Sam. Take it away, Sam.
Thanks, Ed. So we've been staying active, and thank you for joining us, everybody. I hope everyone's feeling well. So in our activity, we're focusing more on strategic initiatives at this point. Why is that? Well, we have a little bit of a slowdown in the marketplace as a result of the availability of distressed assets. So foreclosures are significantly down nationwide. You'll see they're up month over month if you look at some data, but that is not indicative of, it's certainly not up year over year. And there's almost no foreclosures going on in the residential space at this point. Anything that you see trickling out would be foreclosures that started probably before the pandemic and that have just move through the process. In some of our jurisdictions, like Maryland, you can't foreclose until the state of emergency is lifted, and we're not sure when that will be, obviously. So a lot of people are staying put. A lot of people are paying their rent. There are those tenants who aren't. Fortunately for us, our portfolio is standing strong. Our tenants are all on track. So it's sort of the nature of where our properties are located. In some outlying jurisdictions where employment is impacted more significantly, they're experiencing a lot of delinquency in the rental portfolio. So we're starting to see a little break in the commercial market. We're starting to see some foreclosures happening in that space, mixed use, a variety of things, because there's no foreclosure moratorium on commercial properties. So I think the first thing that we'll see when, as the pandemic lifts, is a vast number of commercial properties becoming available and changing use and going through bankruptcy and going up for sale. And I would expect that it could be a bit of a reverse of what we saw in 08, where we saw the housing market leading change in values. But in this case, I think we'll see the commercial market come down quite a bit over the next 18 months or so. So if you're trying to refinance, it's still a great time. The interest rates are unbelievably low, but the difficulty is that the title companies are also unbelievably busy and facing a lot of challenges just getting recordations done and working with any government office that's required to transact a refinance, or even getting your insurance information from a large institution could be slowed down. Everything seems to take about 2 to 3 times longer than a pre-pandemic process. If you're involved with a large company, certainly any kind of utility company or the government, some government activities are slowed down maybe 500%. Like if you were to get inspections on a property or pull a permit, might take you 3 months instead of 3 days, something like that. So we're taking this time to strategically regroup. Charlie will speak to each of our business lines, but we're working on a number of marketing initiatives, some efficiencies in our back office that we were able to take this quieter time, and they'll save us money over time. And so that's a great opportunity. And also work on your marketing strategy right now on how, as the post-pandemic situation unfolds, how you'll be in a completely ready state to either acquire assets or do whatever your particular business line is. So we're very much focused on that, getting very ready and being a first mover as the market starts to unlock and recover. So the markets do matter where you're located. If you're in the DMV, everything I've said sort of applies. Now, outside of the DMV, we're seeing we're lending down in Richmond, we're seeing some wonderful results. The yields that the people are getting are, I'd say, 80% higher than what we generally get on yields here in Northern Virginia, but the market is constrained by a lack of available labor and a lack of available capital to do these large improvements. But there are a lot of assets available in the Richmond market. You can just buy right now, they're boarded up, and step right in and renovate, make a very, very nice return. So if you're in Fredericksburg or south of Fredericksburg, I would head south, at least for the meantime, to find assets to redevelop. They're probably better flips than they are buy and holds. I'm not sure how much growth there's going to be in that market over the longer term on the upside, but you can do your own analysis. So as the pandemic lifts, you might also look at apartments where there's been a lot of delinquencies, multifamily. If you have an ability to get into that space, this could be just that window, especially in the DC area where it's been more or less just people who have historically owned multifamily, and there hasn't been that much available for investors. I think there'll be a lot of opportunity come up probably within a year. So if you want to start looking at how you might finance that, that makes some sense. Charlie, what do you think is going on in the marketplace?
All right. So my approach is going to be slightly different. First of all, I want to welcome all you attendees who have been with us since March. I believe this is our 7th or 8th State of the Market webinar, so I want to welcome you guys back. And the next thing I want to do is I want to welcome Lisa Hancock. For those of you who might be newer to this marketplace, Market Pro Homes is the leader. They're the leading wholesaler in this area, and they do quite a bit of wholesales. And I would imagine over this past year, they've probably had one of their better years ever. And they are the leading wholesaler in the DC, Maryland, Virginia area. So you guys are in for a treat on the back end of this webinar. And Lisa, thank you very much for taking the time. I've known Lisa for quite a long time. And one of the things that she failed to disclose is that she also flipped some houses on her own. So congratulations to Lisa. And I think this year she's done a bunch of flips. So thank you very much for you attendees. And Lisa, thank you very much for coming on with us this morning. So I'm going to approach it 4 ways. The first marketplace I want to approach is our residential buy and hold portfolio. And so for us, we have a lot of rentals in this area. In our rental portfolio, we don't have really entry-level properties per se. We have the second tier up type of properties. And so in that mix, we have a lot of government employees. We do have some Section 8s. We have a lot of technology employees. So as far as people paying rents, we're running between 97.5 and 100%. So our portfolio is very healthy. But with that said, one of the biggest issues that's going on with the buy and hold market is that because there's these eviction moratoriums that's going to carry on to at least December 31st, people are not trying to move. So what's going on in the rental marketplace is that we're seeing, at least in the Northern Virginia area, is we're actually seeing an escalation of rents in our area that we haven't seen in probably 10 years. Because of the lack of inventory, when we get a new property online, and we've had, one or two a month come online with a new renter needed, we've priced those properties at the upper echelon of the subdevelopment, and we've been getting multiple applications. And so these guys have been renting at the high end of the market, and it's pushing up the rents in the various subdevelopments. So that's something interesting that we're seeing, and that's solely because of this eviction moratorium that's going on. Now, the eviction moratorium is going on till at least December 31st. Now, the election impact on that is what we're assuming is that once the new administration takes over, we think the eviction moratorium is going to be extended. Our guess is it's probably going to be extended for another 3 months. So hold on tight. And so what's happened is that nobody is really interested in moving. Some of the tenants aren't paying rents and they're just staying put for the time being. But that hopefully is going to change coming in the first quarter, second quarter of the new year. The second topic that I want to cover is our fix and flip business. And so what's going on now is on the fix and flip side, the number of distressed assets is very, very low because of the foreclosure moratoriums. Now in Virginia, we have a foreclosure moratorium until December 31st. They're doing these things called forbearance agreements. And so what's happening is people are allowed to enter into forbearance agreements with their servicers, but that's a 6 month foreclosure. It's a 6 month forbearance agreement, but they have the right to extend that forbearance agreement for another 6 months. So, and in the state of Maryland, the governor has put a foreclosure moratorium on everything. It's an emergency order. And so you guys have got to be cognizant of that fact. What that's done, other than Market Pro Homes, is that's enabled the inventory levels for you guys to go out there and buy has shrunk considerably because there really isn't that many distressed assets. And so you just got to be wary of that. But what does that mean for you? That means that you need to continue your marketing efforts for when this marketplace unravels. And so we don't know when the marketplace is going to technically unravel. We think it's going to be 3 months from now, maybe 6 months from now. And so you just got to keep doing your marketing efforts and trying to find these assets, postcard mailers, bandit signs, but keep spending on your marketing efforts. We understand the inventory levels are much lower as far as distressed assets, but that's going to change probably first quarter next year, maybe into beginning of the second quarter. The next thing that I want to cover is on our hard money lending side. Our hard money business continues to grow within this COVID market, within the lower inventory levels. We continue to grow. We continue to, get a higher level into our marketplace. So our levels of hard money lending into the DC area marketplace is growing. So we're starting to grow into this COVID crisis. We've been growing since March. We're still growing, even though the inventory levels are low. We're evaluating many, many deals. We're putting out a lot of loans. So our growth on our hard money side is still continuing to this day. Now, what we want fix and flippers to do, and when they enter into our hard money space, is that, as fix and flippers, you have to have 2 exit strategies. You have to have, obviously, your fix and flip exit strategy be just as important. If the market takes a downturn, a correction, you need to be able to keep that property as a buy and hold, and then your exit strategy is going to have to be a refinance. So you have to keep that in mind, because what that means is that this marketplace is at a subdevelopment level. So right now, I'm hearing a lot of complaints from a lot of realtors that are used to selling their houses in the first weekend. They're coming to us and saying, hey, we're getting a ton of showings, but our properties aren't going under contract. And they want to know why that is. So one of the things that we're seeing is that we're seeing stepped up inventory in various subdevelopments. So this market across the DC, Maryland, and Virginia area is becoming a subdevelopment market. So you've got to be wary of that. And what I mean by a subdevelopment market is that you got to go to that granular level and you have to do your own analysis of that subdevelopment. We are seeing increased inventory in some subdevelopments. I am seeing some subdevelopments that are going gangbusters because there's no inventory. And so realtors are getting multiple offers, multiple contracts, but we are seeing a slowdown in that arena. Now, it could be twofold, right? Number one, it's the election. Usually between end of October to January 20th, Martin Luther King Day, the market just comes to a hold, and that's normal. So just be cognizant of that. The other thing that we're seeing is that interest rates are still low, so that's very bullish on our end, and so keep an eye on that. Now, the other thing that's going on is the number of COVID cases are increasing. Keep an eye on that. So we just have a very weird market right now. So you guys have got to, if you're going to purchase a property, buy and hold, fix and flip, you just got to have a few strategies on your exit. And your exit might not be fix and flip, it might be a buy and hold. And so the last thing that I want to cover is what's going on in the commercial space. And Sam kind of tied into that a little bit. And then I'll cover a couple sectors in the commercial space. One of the things that I'm starting to see, at least in Alexandria and Arlington and some of the Northern Virginia suburbs, is we're actually starting to see a lot more foreclosures going on. Just today alone, there's been a couple of auctions, one in Old Town Alexandria that covered 3 addresses that was a restaurant. And so the owner of that restaurant is being foreclosed on because the restaurant owner isn't able to pay rents. And so that's happening. I'm also seeing a very large office building in downtown Arlington that has a tax assessment of about 60 million bucks. That's being foreclosed on today. So we're seeing a lot of this thing starting to come to the marketplace. Now, what you're going to have to do is we're going to see a lot of repurposing of these commercial assets. Office space is going to have to start being repurposed because companies are starting to realize that people that are working from home, they love it. Not only are they getting increased productivity, but they're having to use less and less office space. So what they're going to end up doing is they're going to end up consolidating their office spaces and their office leases, leaving these owners of office buildings sort of high and dry. And so what's going to end up happening is if these office building owners, if they don't get foreclosed on, they're going to have to start repurposing their assets. Now, on the other end of things, the other thing that we're starting to see is one of the bullish things that we're seeing is in the manufacturing space and the industrial space. So from a commercial standpoint, those spaces are very bullish as well. We're seeing a lot of demand for manufacturing. We're seeing a lot of demand for industrial, and we're also seeing a lot of demand for data centers. So there is a lot of demand for that in the commercial space. So I think what you're going to see over the next, 6 months for a year, this could take a while, is that we're seeing, just some repurposing in the commercial space. And so that's basically my presentation for today. And so what I'll do is open this thing up for, do you guys have any questions out there?
And let me just interrupt for a bit as the organizer to say thanks again for those of you who might have been a little late in joining us. We will have a recording of this up, I believe, within 24 hours. And as Charlie just mentioned, please go ahead and send your questions. I think today you'd want to send them to Sandra Delancey, who's still formally our organizer, although for today I'm Ed Grass and we'll try to help moderate. So sorry about the interruption. Back to you, Charlie.
All right. So since I don't see any questions off the top, one of the things that we want to get into is how, and this is what you guys are probably really concerned about, is how is this election impacting our marketplace and how will it impact the marketplace in the future? And so Sam, you can chime in a couple minutes, but let me just go over what I think is going to end up happening. Right now, the market we are seeing some sectors of this market slow down. I am starting to see inventory build in certain asset classes, condos being the first thing, higher dollar properties, anything over $600,000, $750,000 and higher. We're starting to see some inventory build a little bit. We are seeing a lot of, in some of these properties that should have sold by now, we are seeing a lot of people looking at properties, but they are not writing offers. Why is that? Well, Consumer confidence right now isn't very high right now because there's still a lot of uncertainty in this marketplace. You still got a lot of Trump people who are trying to fight the election. You got Biden moving in. Biden's going to start having his own particular policies. He's probably going to raise taxes. That's going to impact especially the LLCs in the future. Our taxes are going to go up. And so there probably is going to be a minor halt in the economy for the short-term future. And so what that's going to mean is that you guys have got to keep your eye on policy. You've got to keep your eye on the interest rates. You've got to keep your eye on inventory levels. And so that's kind of our, viewpoint of the election. The other thing that we think that's going to happen in the springtime, we think there's going to be a double spring. So what that means is that because there wasn't a normal spring last year, as far as people selling their houses, there's going to be a normal spring this year of people putting their houses on the market. And there's going to be the people that didn't put their houses on the market last year, they're going to put their houses on the market this spring, hence the term double spring. The next thing that you got to keep your eye on are the number of forbearances and moratoriums. The eviction moratoriums you got to keep your eye on, the forbearances you got to keep your eye on, and the foreclosures you got to keep your eye on. So there could be some jumped up inventory. We're thinking March, April, May, June. And so that's going to impact the market as well. And so that's kind of our insights into what we think is going to happen because of the election effects and because of the inventory effects. So you guys just got to keep your eye on those marketplaces. Sam, you got anything to add on that?
Just that when the inventory comes back on the market, instead of it being a balloon effect, I think it's going to be very much a gradual effect, a rising tide of inventory, and not just 1 month they're all just going to switch on. It's going to take a long time for the government, especially the new administration, to really roll out and allow foreclosures to proceed. And it'll take a long time for those properties to move through the process.